Good day. I welcome you once again to AE Accounting Tutorials. If today is the first time paying visit to my channel, kindly subscribe to the channel so that anytime I drop a new video, the notification will be right there on your devices. We are continuing our series on correction of errors and suspense accounts. But this time we are going to take a full practical question where you will be required to correct the error by the help of the journal and the suspense account. And we will also be required to prepare a statement of adjusted net profits to ascertain our adjusted net profits. Is that okay? So let's actually go straight to the question and then see how we can prepare these three accounts as far as correction of errors is concerned. Okay, so from our question, the question is the trial balance of Nimapa Limited for the year ended 31st December 2020 failed to agree, and the difference of $277,000 was credited to the suspense account. The following errors were detected. A. The sales day book has been undercast by $130,000. B. A complete omission of drawings by check from the books, an amount of $1,000. C. Discount amounting to $36,000 received from a supplier had been duly entered in his account but not entered in the nominal ledger. D. An amount of $50,000 owing to a supplier had been omitted from the list of sundry creditors. E. A payment of $32,900 for repairs of motor vehicles had been debited to motor vehicle account. F. The purchase journal had been undercast by $100,000. G. Check received from a customer amounting to $200,000 was entered correctly in the cash book but had been credited to the personal account as $20,000. H. The rent and rate amount was undercast by $19,000. Let me take it again. The rent and rate amount was undercast by $19,000. I. The income statement for the year ended 31st December 2020 disclosed a net profit of $1,133,100. You are required: A. Write up the journal entry to correct the above error. B. Show the suspense account. C. Prepare a statement showing the adjusted net profit. Alright, so basically this is the correction of error, full correction of error question where we are being asked to prepare three different accounts. Okay, so anytime you meet a correction of error questions like this, it is always advisable to start from the requirement, okay, so that you know what you are required to prepare. So from our requirement, they are saying that we should write up a journal entry to correct the above error. And B, they say we should prepare the suspense account. And C, prepare a statement showing adjusted net profit. All right. Okay, so basically this is how the journal format looks like. Is that okay? And here is the suspense account too. So we will be taking the question one by one and try to correct them by the means of the journal and then the suspense account. After that, then we prepare the statement of adjusted net profit to correct our profit ascertained in the income statement. Okay. So from the first side of the question, they say that the trial balance of Nimapa Limited had been the trial balance of Nimapa Limited for the year ended 31st December 2020 failed to agree, and the difference of $277,000 was credited to a suspense account. Okay, they are saying that the trial balance of Nimapa Limited failed to agree, and there was a difference of $277,000, and it has been placed at the credit side of the suspense account. Okay, so when we come to our suspense account, they are telling us that because the trial balance has failed to agree, and then the credit side of the trial balance has short of an amount of $277,000, and it has been placed in the suspense account. The suspense account has been explained in my previous video, but then let me take this opportunity to talk about it. This suspense account, it is an account in which both debit and credit entry are being made due to an unknown error. Okay, so it is a temporal account in which errors or correction of errors need to be adjusted if the error is not known. Upon further information or detailed information of the such error, then it will be actually transferred to their proper account. Okay, so if there is any error in the trial balance entry, at the end of the period, you are not able to rectify that error at that initial stage, you come and record that shortage in the trial balance in the suspense account. Is that okay? And they are telling us that it has been recorded at the credit side of an amount of $277. So you come. So the difference is in the trial balance. Okay? Or trial balance different. That's the trial balance difference. Okay? And the amount is $277,000. Alright. Let's look at the A part. That the sales day book had been undercast by $130,000. Okay, the sales day book had been undercast. Okay, so we have to correct this error. First of all, we need to know the individual balances or the balances of the individual account. Is that okay? So first of all, I will use this place for workings, but this is not part of the requirements, but I want to use it to actually explain how we will correct this error. So let me say our sales account, and we know that the sales account has a credit balance. Okay, and they are telling us that the sales amount has been undercast by an amount of $130,000. Okay, the credit side of the sales account has been reduced of an amount of $130,000. To correct this error, because this side is short, to correct it, we top it up by still crediting the sales account. Is that okay? But if it is an overcast, we should have recorded it at the opposite side to reduce the balance. But here is the case, the sales account has been undercast. So in order to correct it, we write the $130,000 over here, but then in the name of suspense. Okay, the reason why I'm using this suspense account to correct this error, we have two basic reasons. Is that okay? One of the reasons is that this type of error is an error that affects the agreement of the trial balance. So all errors that affect the agreement of the trial balance need to be corrected by the help of the suspense account, or they should pass through the suspense account. Is that okay? And two, we all know that for every credit entry, they must have a corresponding debit entry. And for every debit entry, they must have a corresponding credit entry. So because this entry is made in the sales account, it has no other corresponding account in which we need to pass it. Because there is no other account, we pass it through the suspense account. So basically, these are the two reasons. Is that okay? But the main reason is that this error affects the agreement of the trial balance, and all errors that affect the agreement of the trial balance need to pass through the suspense account. So what we do is that we credit sales account and then we debit the corresponding with debit suspense. Okay, so if this happens to be a suspense account, it means that we are going to debit suspense account in the name of sales, an amount of $130,000 this way. Okay, so basically when we are to record it, so this correction of error will be recorded by the help of the journal and the suspense account. I want to do the entry simultaneously. Is that okay? So what we do here is that because in the suspense account it has received a debit balance or a debit entry, when we go to suspense account, we debit suspense account with this amount. Is that okay? We are debiting the suspense account because in our correction, the suspense account received a debit entry. So we come to suspense account and write sales, a debit entry, $130,000. Alright, and in the sales account, receive a credit entry, but the sales account here is not relevant. We only use it to correct our error. But this correction of error need to pass through the journal. Is that okay? So by passing through the journal, we normally record the account that has the debit entry first before the credit entry. So from our analysis, we can see that the suspense account received the debit entry. So we are going to record the suspense account first, followed by sales. So A. With the A, you have suspense account. Suspense account had a debit entry of $120,000, followed by sales. But in writing the sales, for easier identification, you shift it small before you write it. Don't write it under the sales. You bring it to the front small and write sales account. And also receive a credit entry of an amount of $113,000. Okay. So after passing the error through the journal, you need to narrate it. Okay. So you need to give a narration. But the narration, you can use just your normal English language to actually give the narration by explaining it. But it's always advisable to use the name of the error to actually explain it. Is that okay? So by this, we can say that it is an error of sales daybook undercast. Is that okay? So you can say that being sales or sales account, or is all the same. Sales, let's say the sales account, to make it simple. Being sales account undercast. So it is an error. So error now corrected. Error now corrected. Error now corrected. Then you neatly underline it. So it's really underlined to this place. So let's look at the second error. The second error is saying that a complete omission of drawings by check from the book had been, or a complete omission of drawings by check from the book, an amount of $1,000. Okay, this is a complete omission. Is that okay? The drawings made by check has not been recorded at all. Okay, this is a complete omission, and this complete omission, it is an error that does not affect the agreement of the trial balance. And we made mention that all errors that do not affect, all errors that do not affect the agreement of the trial balance, they don't pass through the suspense account. Is that okay? Because they have two different accounts in which the error will be corrected. So it will never pass through the suspense account. So this is a complete omission. So we are talking about drawings being omitted. So we have our drawings accounts. I'm just using this for explanation. Then it is by check. So check is always bank. We have bank accounts. Okay. It is drawing from the bank. So bank is giving out, drawing is receiving. So we debit drawings in the name of bank, an amount of $1,000. We credit bank in the name of drawings in the amount, with an amount of $1,000. Okay, you can see that because we corrected this error and it has two different accounts in which the errors has passed through. So we will not use a suspense account, and all this error does not affect the agreement of the trial balance. Is that okay? So drawings receive a debit entry. So you come here and receive and write drawings first. Okay. After that, we write the bank and an amount of $1,000 each. After that, you narrate it. Okay. So you can say that the name of this error is a complete omission. So complete omission of drawings now corrected. It is an error, so error now corrected. then you underline it very neatly. Okay, so you look at the C part. With the C part, they are saying that discount amounting to $36,000 received from a supplier had been duly entered in his personal, or let me take it again. A discount amounting to $36,000 received from a supplier had been duly entered in his account, but not entered in the nominal ledger. All right, a discount received from a supplier had been entered in his account, but no entry has been made in the nominal ledger. With this error, you need to know what a nominal account is. Okay, the nominal accounts are the expenses and revenue accounts. If you don't know your various classification of accounts, you find it very difficult to actually understand this. Because the nominal account is expenses and revenue accounts, and creditors, we have discount received, and discount received is a revenue, and then it has not been entered, but the entry had been made in the supplier's account. So they are only concentrating on the discounts received. But mind you, in correction of errors, if they said one account has been done correctly, don't tackle it. The account that has not been actually recorded well or has not been entered, you correct that error. So let me remind you of this. You can see that we passed the second error successfully without passing it through the suspense account, just because this error does not affect the agreement of the travelers, and it has two separate accounts to correct it. That is the reason. So we look at our discount receipt. So discount receipt account. So we all know that the discount receipt has a credit balance. It is a revenue. Is that okay? And it has not been recorded. So what do? We come back and make the necessary entry. Is that okay? So we come and do the entry, and the amount is 36,000. So we come here and do the entry 36,000. Is that okay? Because it has no other account to make the entry, the corresponding entry will be that you debit a suspense account. So we debit the suspense account in the name of discount received, $36,000. This will be in the name of suspense. Okay. Then when we come to the suspense account, we have to pass this error through the suspense account. Because suspense has a debit entry, we come and record it on the debit side as discount received. And the amount is 36,000. Okay. Then we pass it through the journal. The suspense account still has the debit entry. So we write the suspense account first. Suspense account. After that, we look at the discount receipt account. Discount receipt account. And the amount is 36,000. 36,000. Alright, then we correct this error. The discount received has not been recorded. So discount received. So discount received account omitted. We didn't record it at all. Omitted, now corrected. The error is now corrected. Then you neatly underline it this way. Then we look at the next error. Is that okay? And then the next error, that is D. An amount of 50,000 owings to a supplier had been omitted from the list of sundry creditors. Okay, so an amount of 50,000 owings to a supplier had been omitted from the list of sundry creditors. Okay, so it means that the amount has been omitted from sundry creditors. Okay, so we have our creditors account, and it has been omitted. We knew that the creditors has a credit balance. We didn't record it. Is that okay? So we come back and record it. and the amount is $50,000. $50,000. And because this error has no other entry to be made, we pass it through the suspense. Is that okay? Because this error affects the agreement of the trial balance, we pass it through suspense. So therefore, our suspense account. Creditor's account has a credit balance in the name of suspense. We debit suspense in the name of creditors. All this is not part of the requirement there. You are just using it to explain. So you can use it, or you can actually use this as your workings. So $5,000. Okay. So when you go to our suspense account, the suspense still have a debit entry. So we come and record creditors. Okay, and the amount is 50,000. Then we pass it through the journal. The suspense has a debit entry, so we come and write suspense. So that is suspense account. After that, we consider the creditor's account. And the amount is $50,000. $50,000. After that, you underline. Now, let's actually do the narration first. Is that okay? So this is creditor's account not recorded. So that is creditor's account omitted. It is also an omission. And creditor's account omitted. Now corrected. But let me draw your attention to this. You can see that this omission, it is a partial omission. Is that okay? This omission, it is a partial omission. You can see that. So partial omissions, they pass through the suspense account. But from this B part, it's a complete omission. Complete omission doesn't pass through a suspense account. And this is one of the tricks you need to know. Is that okay? Alright, so let's look at the next error, which is E. A payment of $32,900 for repairs of motor vehicle had been debited to motor vehicle account. Is that okay? A repair of motor vehicle has been debited to motor vehicle account. Anytime you commit this error in your book, it means that you don't know your accounting principles. Anytime you violate your accounting principle, this error will be committed. Okay. You need to know your classifications of accounts. Okay, and we have two separate accounts here. We have repairs of motor vehicle. Okay, and let me write it here. We have the motor vehicle itself account. You can see that this motor vehicle account is an asset account, and this repairs for motor vehicle is also an expense account. Is that okay? But the amount or the transaction is actually related to repairs for motor vehicle. So we need to debit motor vehicle account, but they rather debited the transaction in the motor vehicle account instead of repairs for motor vehicle. So they've debited it over here. So it means that, and the amount over there is $32,900, and they've debited it over here. So we need to cancel it from this motor vehicle account and come and record the correct entry in the repairs for motor vehicle. Okay, so in correcting, we come and we credit the motor vehicle account by repairs of motor vehicle, an amount of $32,900. Okay. The reason why we are recording it at the credit side is that they have debited it to a motor vehicle account, so we don't need to write it again. Is that okay? So in correcting it, we assume that they've written it here, they've debited it, so we write it at the credit side to take it off or to cancel it off. Then we come to the repairs of motor vehicle account and do the right entry. So we debit it in the name of motor vehicle. $32,900. You can can see that this error doesn't pass to the suspense account. Is that okay? So we will not tackle the suspense account. We come to the journal. So that is E. The repairs of motor vehicle receive a debit entry. So we write repairs of motor vehicle account. Then the next will be motor vehicle account because it has the credit entry. Alright, and the amount here is 32,900. 32,900. Then we need to actually narrate this error by doing the narration. Because we know that this is an error of principle, we violated the principle. We can say that being error of principle now corrected. Then you underline it very nicely. And we look at the next error, which is the sales journal had been undercast. Oh, no, sorry, the purchase journal had been undercast. Alright, the purchase account has been undercast. So let's try to correct this error. So let's consider the purchase account. They say purchase journal, but at the end of the period, the summation of the purchase journal, the total of the purchase journal will be transferred to the purchase account. So it's the same thing. The purchase account had been undercast, and we knew that the purchase account has a debit balance, and it has been undercast. So what do we do? Even if the account has been undercast, we top it up. Because purchase account has a debit entry, by topping it up, you record it at the debit side to top it up. But if you are doing subtraction, I keep telling you, when we are doing subtraction in this account, ledger account, when the account have a debit balance and you want to subtract, record it at the opposite side and vice versa. But then because it is an undercast and it has a debit balance, we have to top it up, we record it at the debit side. Is that okay? And then this error is really affecting one account, so it will go to the suspense account, and hence it affects the agreement of the traveler. So we record, we debit, we do the correction by, because it has been undercast, we debit it in the purchases account, and the amount is $100,000 this week. Then we open our suspense account. We credit it in the name of purchases. $100,000. Is that okay? Let me write it wrong. So that is $100,000. Okay. This account or this correction of error has already gone to, or we use the suspense account in correcting it. So you need to pass it in the suspense account. You can see that the suspense account here receive a credit entry. So it means that we are going to record it at the credit side in the name of what? Purchases. Alright, so we come here and record purchases. And the amount is 100,000. Alright, we come and pass it through the journal. Purchase account receive a debit entry. We record the purchase first. Purchase account. After that, a suspense account. This account. Okay. So the amount is 100,000. The first being debit, the second being credit. Okay. So this is purchase account. We are doing the narration just like that. Purchase account undercast. Now corrected. That is an error now corrected. So it is now corrected. Underline. The next error. Okay, we are considering the next error, which is J. Check received from a customer amounting to $200,000 was entered correctly in the cash book, but had been credited to the personal account as $20,000. Okay, so the personal account here is the debtor's account or the customer's account, because they say that the entry has been made in the cash book correctly, but in the debtor's account it has been credited. Okay, so that is debtor's account. Okay, they are saying that it has been credited to debtor's account as $20,000. Okay, the amount initially was $200,000 received from a customer, that is debtors. So they're supposed to credit the debtor's account with an amount of $200,000. Instead of crediting it with $200,000, they rather credited it with $20,000, which is an undercast. Okay, so because debtors account has a credit, debtors is paying out. Okay, so we need to credit debtors account and debit the cash book. Cash book entries has been made correctly. So instead of crediting it with 200,000, we have understated the amount by $20,000. So we need to add it up. Okay, so to add it up, what we do is that we find the difference, and the difference between these two amounts is $180,000. Okay, so we use the difference, the undercast amount, to top it up. Okay, so we top it up by saying that recording $180,000, and that will go to suspense. Then you have our suspense. We receive the corresponding debit entry in the name of debtors, $180,000. Okay, so this account involves a suspense account, so it will pass through the suspense account. The suspense has received a debit entry, so we come here and write debtors in the name of debtors, and the amount is $180,000. We come and pass it through the journal. Suspense has the debit, so we come and record it suspense account, and the corresponding entry is debtors account or customers account. Okay, and the amount is $180,000. Then we do the narration. Okay, so this is undercast of debtors account. Okay, or debtors account undercast. Now corrected. The error is now corrected. We've corrected it successfully. Then we underline it neatly. So we consider the next error. And the next error here is H. That is the rent and rate account was undercast by $19,000. Okay, so let's consider the rent and rate account. The rent and rate account. It is an expense. Rent and rate is an expense, and it has a debit balance. Okay, and the account has been undercast. So we top it up. That is $19,000 in the name of suspense. Then the corresponding entry will be the suspense account. Debit here, credit and suspense account in the name of rent and rates, $19,000. Okay, suspense account is involved. We pass it to the suspense account, and it is at the credit side of suspense. So rent and rate. Okay, rate. The amount is $19,000. Come and pass it through the journal. Okay, by passing it through the journal, rent and rate has a debit entry, so we record it first. Rent and rate account. After that, suspense account. All right, and the amount involved is $19,000. 19,000. Then we actually do the narration. It is a rent and rate account undercast. Okay, so rent and rate account undercast. So the error now corrected. We fully corrected the error. Alright. So this is how we pass it through the journal. And then they are saying that the income statement for the year ended 31st December 2020 disclosed a net profit of $1,130,100. Okay, so this net profit, you use this net profit in the statement of adjusted net profit. Okay, we had a net profit from the income statement, but we've actually gotten an error and we've corrected it. So because we've corrected this error, and we need to make an adjustment. But first of all, anytime there is an error in the book, those errors are normally committed at the initial stage of bookkeeping, that is recording. That is where we made our double entry. And you can actually testify that it is through the double entry that the balances of the individual account from the double entry that we use to prepare the trial balance. And you can also testify that it is the information that is being found in the trial balance is what we use to prepare our income statement. So if there is a mistakes in those information, there is a mistake in the ledger, individual ledgers, automatically there will be a mistake in the trial balance. So if there is a mistake in trial balance and we use the information to prepare the income statement, automatically then the net profit you ascertain in the income statement will be wrong. So now we have corrected the error. So we need to make adjustments to the net profits to ascertain our corrected or adjusted net profits. Okay, so but before that, let's close our suspense account. Let's close our suspense account. So by closing the suspense account, you add the debit side, add the credit side. So when we sum this up, we will get 396,000. We close our account. Is that okay? Let me do it this way so that I can get a space to do the statement of adjusted net profit. So the total here will be 396,000. Then we sum this up. It will also give us 396,000. Alright? So the suspense account must balance on its own if the errors are actually corrected successfully. But mind you, this is the requirement A, the journal. This is the requirement B, the suspense account. Now let me the requirement C, where they are saying that we should prepare a statement showing adjusted net profit. So requirement C, that is statement of adjusted net profit. Okay. So with the statement of adjusted net profit, we bring our currency sign. We bring 2. Okay. That is dollar. Dollar. That is dollar. Is that okay? So now, in order to actually correct this net profit, they've given us the net profit we have ascertained in the income statement. So we can say that net profit, we start from the net profit we ascertained from the income statement. That is net profit reported. That is net profit reported from the income statement. But sometimes you may not ascertain an income a net profit from the income statement. You may ascertain a net loss. If it is a net loss, you bring it. But in our case, it is a net profit, and the amount is $1,133,100. Okay. The statement of adjusted net profit has been already explained in my previous video. You can go there and watch it to get a better understanding. Then what the statement of, or the tricks on the statement of adjusted net profit is that all errors that reduces our net profit, we add it back to the net profit. Okay, and all errors that increases our net profit than we should get, we less it. Is that okay? So all errors that increases our net profit, we add them back. Okay, so all errors that reduces our net profit, sorry, let me come again. All errors that reduces our net profit, we add it back to the net profit. And all errors that overstate our net profit or tend to increase our net profit, we less it from the net profit. So let's go through the question quickly and see that and check the errors that either increase or decrease our net profits. But mind you, in the statement of the statement of adjusted net profit, the errors that will come here is those errors that affect items in the income statement. There are errors in our question here, they affect items in the statement of financial position. Example, there are errors that affect debtors, and there are errors that affect creditors. And debtors and creditors, we don't treat them in our income statement, but we rather treat them in the statement of financial position. Because of that, it won't have any effect on our net profit. So we will not adjust those errors. But those errors that affect items in the income statement, we will quickly adjust them to correct the net profits. So the first one is talking about a sales day book undercast. Okay, so anytime you reduce your net, you reduce your sales, or anytime you reduce your revenue, you are actually reducing your net profit. So we add it back. Sales is the revenue. So if we reduce our sales amount or we reduce the sales balance, we are reducing our net profit. So we add it back. So we are adding sales. Okay, that is sales undercast. And the amount involved is $130,000. Is that okay? In the next error is talking about a complete omission of drawings. And we don't treat drawings in our income statement. Okay, unless it is a stock drawings before we will treat it in the income statement. But here is the case, it is a cash drawings that has been drawn from the bank. So it will not affect our income statement and also our net profit. And C, a discount amounting to $36,000 received from a supplier had been duly entered in his account, but not entered in the nominal ledger. That is a discount received, not recorded. And the discount received is a revenue. And anytime we omit our revenue account balance, we are reducing our net profit. We have to add it back. Is that okay? So we add discount received, omitted, we omit it. And the amount involved over here is $36,000. Okay, so upon considering this our question, we can see that the other errors that affect our net profit is rather increasing our net profit. So we need to less it. Okay, so these errors reduce our net profit, and we are adding them back. So let's first of all add them. So this will give us we add this to give us $166,000. Is that okay? So when it gives us $166,000, we add it to our total net profits. That will give us $1,299,100. Okay, when we add these two, then after getting these two, we come back to less those errors that tends to increase our net profit than expected. Is that okay? So then the D is saying that an amount of $50,000 to supplier had been omitted. Creditors, we don't treat them in our income statement, so we will not look at it. E, a payment of $39,000 for repairs of motor vehicle had been debited to motor van account. So that is our expenses. The repairs for motor vehicle is an expense and it has not been recorded. So we are reducing our expenses. So anytime we reduce our expenses, we are increasing our net profit than expected. So we need to less it. That is repairs of motor vehicle. Omitted. First of all, let me bring it at the bottom. Okay, I'm not referring to this amount, so let me bring it at the bottom small. So repairs of motor vehicle, $32,900. Okay, let's consider the next one. The pitches, that is F, the pitches journal had been undercast. Okay, anytime you reduce your pitches amount, your net profit will increase than expected, so it will be less. So pitches account undercast, or pitches amount undercast, and the amount involved is 100,000. And then the next one we can talk of is check receipt from customer. We won't actually tackle it because customers go to the other side. So at H, the rent and rates account has been undercast. When you reduce your expenses, you are rather increasing your net profit, so less. So rent and rates undercast. Okay, and the amount involved is 19,000. Okay, and this, the summation of this, they will give us 151,900. Is that okay? Okay, so this 151,900, what we are going to do is that we are going to less it from this to get the adjusted net profit. Is that okay? We are going to less this from this to get the adjusted net profit, and that will give us 1,472,000. Is that okay? And this amount is going to give us our adjusted net profit. Adjusted or corrected. You need to write only one, don't write the two. Use only one. Either adjusted or corrected net profit. Okay. So basically this is how we solve a correction of errors question. Is that okay? If you have any question or any question to ask, you put it at the comment section for us to actually look at it. And if you haven't subscribed to, make sure you subscribe to my channel. Better things are ahead coming. Better topics will be actually treated. So kindly subscribe to the channel. Until we meet, I think bye for now.